we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at how the global markets managed to pan out in trade. US was rather weak in trade. There was green across Europe and Asia. It started off well. You're seeing green across Asia, and the SGX Nifty is also indicating that there is positive traction as far as our markets are concerned. So we are comfortably above the 10,500 mark in trade. Now, if you're looking at what the ADRs managed to do in trade, basically the ADRs managed to do well. Dr. Reddy's was up 4%, Infosys was up 1.5%. There was traction all across. The only counters that didn't do well was Wipro as well as Vedanta, which were down in trade. Now, as far as the Nifty was concerned, the Nifty managed to move up 40 points, and majority of the move came in the last half an hour of trade. But there was severe outperformance by the mid cap and the small cap end of the market. So that's what the traction was seeing. The Nifty Bank was flat on account of weakness in ICICI Bank, and the Nifty PSU Bank was also flat in trade. Now, if you're looking at which were the sectors that managed to do well, the Nifty Pharma Index was up 2.6%. That was the best performing sector, and the worst performing sector was the Nifty Auto, which was down 0.5% in trade. Now, as far as the flows are concerned, FIs were net buyers to the tune of 6,700 crores. DIs bought in 296 crores in the cash market. On a month-to-date basis, FIs have sold in 17,000 crores. DIs have bought in almost 15,000 crores in this market. As far as the Nifty was concerned, 40 points up. What contributed? The heavyweights, ITC, HDFC Bank, Reliance, and Infosys. And what didn't contribute was ICICI Bank, and that's why the Nifty Bank was weak in trade. HUL, L&T, and M&M were the other weak contributors. The Nifty saw open interest build up of as high as 2% on the long side, so there was traction that was seen. The Nifty Bank was absolutely flat in trade, but that too saw open interest addition of 1%. As far as where positions are being taken, 11,000 is the big resistance, but still call writers are active from levels of 10,500 to higher levels, so there is enough traction. And if the market manages to stay above the 10,500 mark in trade, short covering will be much severe for the market. Now, as far as the put writers are concerned, they are writing in from 10,500 to lower levels. What we saw yesterday was that at lower levels, call writers were forced to shed positions in open interest and take positions at higher level since the market managed to move up in trade. So that's the scene that we are seeing. Two stocks in the F&O band, IDBI Bank and Adani Power. The Nifty PCR and the Bank Nifty PCR also managed to stay stable. As far as the stocks are concerned, Kotak Mahindra Bank didn't move much, but open interest build-up has definitely been seen over the past few days. So expect there will be more traction on Kotak Mahindra Bank. Even V-Guard was the other counter in which I'm seeing there is open interest build-up. The counter didn't move much, but at this point of time, there is accumulation that is happening. The third stock that we want to highlight is Ajanta Pharma. Again, counter not moving, but look at the open interest build-up. So there is definitely a build-up that is happening, and these counters probably will be moving either on the longs, mostly on the long side. And IRB Infra has fallen almost 50% from the recent highs. Open interest build-up of 2%, and that too on the short side. So those are the tractions that we are seeing in from the domestic markets. Let's go across to Sophie Kamaruddin for all the top international headlines.
The U.S. budget deficit grew to a fraction under $780 billion in Donald Trump's first full fiscal year as president. Tax cuts and higher spending made it the biggest shortfall since 2012. The budget gap for the 12 months through September was 17% wider than the same period a year earlier. Spending rose more than 3%, while government revenue gained just 0.4%. Italy's populist coalition has managed to pull together a last-minute budget that will allow it to fulfill costly election pledges. However, it may threaten a confrontation with the European Union. Tuesday is deadline day for Eurozone nations to submit their budgets for fiscal 2019, and Brussels had already warned Rome about raising the deficit beyond EU rules. That sparked a sell-off in Italian bonds. The rupiah pared losses as Indonesia posted a first trade surplus in 3 months. Southeast Asia's biggest economy reported a surplus of $227 million in September. The median estimate in a Bloomberg survey was for a shortfall of $500 million. The surplus comes after official efforts to curb imports and reverse a widening current account deficit and to stabilize the currency. Bill Gates says he is heartbroken at the death of Microsoft co-founder Paul Allen at the age of 65. Allen established Microsoft with childhood friend Gates in 1975, leaving in 1983 amid health concerns. Allen used his subsequent Microsoft fortune to invest in pro sports teams, cable TV, and real estate. His investment firm Vulcan says he died in Seattle of complications from non-Hodgkin's lymphoma. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sophie Kamrudin. This is Bloomberg.
There are two big categories of risks. One is clearly related to the trade tensions that we have seen over the last year now, materializing with, risk of retaliations and possibly acceleration. Our message was very clear: de-escalate the tensions. And number two, open and maintain the dialogue in order to reform, change and improve the trading system as we know it, with a legal framework that gives certainty and that gives this free, fair and mutually beneficial system that works for all. The second category of risks has more to do with financing, because clearly there will be monetary tightening going forward in the United States because of the improvement of the economy, which is welcome and which helps. But that monetary tightening will be affecting all countries around the world, including those countries that have a good policy mix. You look at a country like Indonesia, for instance, where the policy mix is solid and where the numbers are really good. Well, yet it is being affected because of this risk out there that financing cost will increase and that tension will bring about some questions.
You've talked about complacency in the markets and how valuations in the US are very stretched. After the cut in the growth projection for the world, we saw a correction. Do you see that as an anticipated reaction, the start of correction, or more to come?
Stock markets go up and down, and I'm not going to comment on an episode of ups and episode of down. I think what we're telling policy makers is just be prepared, because there will be more volatility. And as the US economy is improving, there will be monetary tightening going forward. Everybody has to prepare for that.
Are there any risks that are being underestimated by the governments today?
Anybody who doesn't keep their eyes on those levers that they have, whether it's monetary, whether it is fiscal, whether it is structural reforms, is taking an unnecessary risk. I think now is not the time, because we've had 3.7 last year, this year and next. Now is not the time to say, okay, fine, let's relax and let's just do a bit of fiscal tolerance here and a bit of slowing down of the reforms. No, time is to just continue to steer the boat and to steer it decisively in order to deal with those a little bit more choppy water.
Stock of the day is Zee Media Corp on back of good set of numbers reported by the company. Let's look at the top line growth first. The company has registered a 36% growth out there at a number of around 168.7 odd crore as compared to nearly 124 crore that we've seen in the corresponding quarter of the previous year. Net profitability of the company has shot up more than 10 times or close to 10 times at a number of 17.3 crore as compared to nearly less than 2 crore figure that we saw in the corresponding quarter. It's been a healthy show even on operational front for the company. We're looking at a 53% uptick there to a number of 41 crore as compared to 27 crore in the quarter ended September 2017. If you look at the EBITDA margin, it's come in at 24.2% as compared to nearly 21.4%. So we're looking at a healthy margin expansion out there. Factors that have led to good set of numbers: higher revenue combined with the lower operating cost and employee costs has led to a jump in the operational performance of the company. Operating costs as a percent to your net sales, that number has declined to 14.5% from nearly 16% that we saw in the corresponding quarter. Employee benefits as a percent to net sales, that expense has dipped at 22% as compared to nearly 25%. Also, besides that, we are seeing in lower tax outgo, which has aided the bottom line performance of the company. Now the tax as a percent to PBT stands at 33% as compared to nearly 37%. Importantly, higher profit from discontinued business, mainly at 17.5 crore as compared to nearly 13.8 crore that we've seen in the corresponding quarter, has as compared to 3.8 crore in the corresponding quarter, has led to a sharp jump up in the bottom line performance of the company. Let's look at the revenue segmental breakup out there. Advertising revenue, that's almost 35% uptick there. Subscription has gone up by 12%, and other sales have a huge jump out there at more than 200%. Also, if you look at the half-year performance of this company, that's a pretty picture there too. 35% uptick on the top line front. In bottom line, we're looking at a more than 600% jump out there at a number of 52 crore as compared to 7 odd crore. And if you look at the EBITDA, it's a 48% growth there. Margins too have expanded at 21% as compared to margins have expanded to 24% as compared to 21.7% in the corresponding period of the previous year.
Let's now get your check on the commodity space, and starting off with oil prices, WTI is currently trading positive for the third consecutive session. Also, the Saudi energy minister has said that Saudi Arabia is a responsible supplier of crude oil and will increase its output to keep the oil market stable. In a Bloomberg survey, we are expecting Cushing crude oil inventory to rise as much as 2 million barrels for last week. That's as far as the oil markets are concerned. But looking at the base metal space, most of the metals decline on the London Metal Exchange except for lead and tin. As far as individual base metals are concerned, we had copper, which declined for the second straight day on the back of an inventory decline of nearly 3% on Monday. So did nickel, as the inventory fell to the lowest level since 2013. Zinc was the top loser by losing about 1.8%. And lastly, talking about gold prices, we have seen good uptick come about in the gold prices last couple of days, and it closed at the highest level in the last 2 months on the back of haven demand.
Well, amongst the stocks that should keep an eye out for includes a couple of companies which reported earnings after market hours. The first one on the list is South Indian Bank. While the net interest income growth was muted, the company reported a net profit of 70 crores as compared to a profit of just 4 crores in the year ago comparable quarter, despite a drop in operating profit, and that is only because provisions more than halved in this quarter over the last year quarter. If you look at the gross NPA, we did see a marginal hike from 4.54% in the June quarter to 4.61%. And additionally, they've also said that they've made an additional provision of 20 crores as a prudent measure to their exposure, which is believed to be towards ILNFS. So that's Southern Bank. Delta Corp, mixed numbers coming in, while revenues reported a good, strong growth of 38%. The net profit growth was restricted to 11%. That's because of the operational performance, where the EBITDA margins fell off from 45.1% to 37.8%, and that's on account of higher other expenditure. You also have Pitti Engineering, a good strong set of numbers, reported revenue growth of 106%, so that's nearly double. Net profit growth came in at 139%. Even if you look at the operational performance, EBITDA grew by 110% and EBITDA margins moved up by about 20 basis points. You have Reliance Industrial Infrastructure, disappointing set of numbers, revenue growth of just about 7%, while net profit growth dipped to about 22%, and on the other hand, EBITDA margins also came off by nearly 500 basis points. Aside of the earnings, we're also watching out for Den Networks and Hathway, and that's on account of the Times of India report, which says that Reliance is nearing twin deals to acquire big stakes in both these companies. Both these stocks had seen a sharp up move in trade yesterday, but they will continue to remain in focus on the back of this news development. In fact, the report also says that the board of all the three companies are likely to meet on Wednesday. Their board meetings are scheduled, so watch out for those names. And finally, you have Advanced Enzyme Technologies and insider trades, where the promoter group Atharva Green Ecotech has sold 4.9% stake. That's 55 lakh shares on October 12. Overall, the promoter and promoter group held about 67.34% stake as of 30th June. So that should come down by about nearly 5%. So that's a negative Q for the stock.
Okay, the big number that you need to watch out for today, it will be Infosys. TCS has already reported numbers. The second IT company will be Infosys. Dollar revenues, we are seeing a growth of 2%. The rupee revenue will be much higher at 6% because the rupee has depreciated close to 6.5% against the dollar. EBIT is seen up almost 8.8%, which translates to EBIT margins of 24.4%. And profit, we are seeing up almost 12%. It will be important to see what the management says as far as the guidance is concerned. They had given FY19 revenue guidance of 6 to 8% in constant currency and operational margin guidance of 22 to 24%. So it will be important to see whether they maintain it or no. Margins will expand on the back of the weakening rupee. Remember, every $1% rise in the dollar rupee equation means a 20 to 25 basis points improvement in margins, and the rupee as of now has depreciated close to 6.5% against the dollar in the second quarter. Management has indicated that there are tractions as far as revenues are concerned. In the revenue outlook, they have shown guidance, they have shown traction. The two verticals that they have grown are BFSI and the America geography vertical, and these are the largest verticals, and there is gradual recovery that is happening there. And what do you watch out for now for Infosys? First of all, the new deal sizes and wins in the digital space. You also watch out for large outsourcing pipeline, what kind of tie-ups that they're looking at this point of time, what's the update on the visibility of the BFSI sector, and finally factors that may influence margins in FY19. So those are the important factors that you need to watch out and trade.
It would be interesting to see how the first auto company reports the quarterly earnings. So we have Hero MotoCorp, wherein we are expecting the second quarter sales to rise by nearly 8% on a year-on-year basis. However, because of higher commodity cost, input costs, as well as the phasing out of Haridwar tax benefits, we are expecting the EBITDA and profit should be down anywhere between 4 to 6%. On an absolute basis, expect EBITDA of close to 1,400 crores and profit of close to 945 crores versus a level of 1,010 crores on a year-on-year basis, and that is a decline of nearly 6.5% at the net profit level. Margins, as I was mentioning earlier, there would be margin pressure, so margin is expected to be close to 15.5% versus a level of 17.4% on a year-on-year basis. Remember, in the second quarter, the company has reported a volume growth of nearly 5.5%, and the realizations are expected to improve by nearly 2 to 3%, given the fact that the company had increased their billing prices in the month of April, and that is probably how the base moves. Of course, the key important factors to watch out for, apart from the earnings, is the company's commentary on the demand in this festive season, especially in the rural markets, and also how really is the ramp up happening on the export side. So broadly, we are expecting a stable quarter for Hero MotoCorp. We will be watching out for that margin figure, given the fact that the commodity costs have significantly increased on a year-on-year basis.
Well, in terms of the key takeaways from the Q2 earnings of Indiabulls Housing Finance, the net profit growth missed estimates and came in at 21%. That is a multi-quarter low number. In fact, even the loan growth has slowed down to sub 30% level. So it came in at 28.9%. That's more than an 8-quarter low. When it comes to spreads, the company was able to maintain them at 3.24%, which is the higher end of the guided range of 300 to 325 basis points. But the incremental spreads are now at 2.76%, and that will be the key monitorable over the next 1 or 2 quarters. Apart of that, on asset quality front, it was steady on a sequential basis. The gross NPA number came in at 0.77% as compared to 0.78%. With respect to the liquidity aspects, the company has said that their ALM is fully matched for all the buckets, and in fact they have a 400% and 135% coverage on repayments which are due over the next 1 month and the next 6 months. Nevertheless, they have revised their FY19 growth downwards from the previously suggested 25% sort of levels to about 20% sort of levels. But largely, brokerages believe that given the near-term focus of the management on overall liquidity, it may mean some sacrifice on growth. Macquarie has maintained their outperform with a target price of 1400. They've said that the disclosures on liquidity coverage and ALM position indicate that there is no pressure as far as meeting near-term obligations is concerned. They've also said that Additional undrawn bank lines will help concerns on any default in obligations in the near term, and they think that the liquidity concerns are overdone and the recent correction is an opportunity to buy. JP Morgan has maintained an overweight with a target price of 1600. They have a similar view. They've said that ALM of the company is conservative, and overall they will be able to ride out the current stress in the currency markets. They've said that the medium-term story for the company as a consistent earnings compounder still remains intact, and that the recent stock price decline was an opportunity to buy. CLSA, on the other hand, has maintained a buy but cut their target price from 1700 to 1500 as they have trimmed their earnings by about 3 to 5%. They've said that while fees and upfront sell-down gains can lift some earnings, but adherence to pick up in asset growth will be the key going forward. They've maintained their buy nevertheless, given the stronger balance sheet, which they believe will be able to support better access to fund and asset growth. So clearly, focus shifting to liquidity and some growth concerns materializing.
Let's now look at some of the stocks to watch based on yesterday's delivery buying and selling. The first stock on the list is Lupin. Now that was up about nearly 5% in trade and saw delivery buying of nearly 100 crores. The delivery volume almost doubled for itself when compared to its 5-day average, while the total volume surged just about half as compared to its 5-day average. Second stock to watch out for DMart, which was down about 5.8% in trade after its results and saw delivery selling of nearly 80 crores. The delivery volume surged about 68% as the total volume jumped more than doubled when compared to its 5-day average. Last and final stock to watch out for, ITC, which was up about 2.7% and saw delivery buying of 317 crores. The delivery volume surged about 42% as the total volume surged just about 39% as compared to its 5-day average.
On the big brokerage calls for the day, first we have is HSBC on Motherson Sumi. Now the brokerage has maintained its buy rating on the stock but has cut down the target price to 350 from 400 rupees, which still suggests a potential upside of nearly 40%. Now according to the brokerage, the brokerage has cut the target price as it has lowered its earnings estimate to factor in on slower global and domestic market growth. Now, however, the brokerage believes that the investor concerns are exaggerated and investors are currently ignoring the positives from potential acquisition that the company might do in future, weaker rupee, and because of new emission norms that will propel growth for the company going forward. Lastly, the brokerage says that the stock price correction has created an attractive entry point for Motherson Sumi as the company is well placed to benefit from the increasing role of auto component suppliers. Second we have is Macquarie on IndusInd Bank. Now the brokerage has maintained its outperform rating on the stock but has cut down the target price to close to 1,975 from 2,100 rupees, which suggests a potential upside of nearly 21%. Now, according to the brokerage, the net interest margins of the bank are under pressure as liquidity tightens in the market. On ILNF exposure, the management is confident that no incremental provision will be required other than the 275 crore rupees which has already been provided for in the second quarter of financial year 2019. Lastly, the brokerage says that they have cut the target price on the bank as it has conservatively factored in a 20 basis points rise in the credit cost for ILNFS exposures and has also adjusted its valuation model for the rising bond yields.
All right, Asian markets have picked up momentum in the first couple of hours of trade. So that's going to be a good indicator as to how we're looking in India. For all the action in the markets over the course of the day, you'll find everything that you need to know on BloombergQuint.com. And there's also several stories that you should consider reading. First up, 8 days after the first allegation of sexual harassment against MJ Akbar emerged, the junior minister in the Narendra Modi government has decided to go on the offensive. Not only has Akbar, who is a Minister of State for External Affairs, refused to step down, he termed the allegations against him malicious and filed a defamation suit against Priya Ramani, one of the first journalists to call him out. And in the international space, President Donald Trump has said that he's immediately sending Secretary of State Michael Pompeo to Saudi Arabia to meet with King Salman bin Abdulaziz and suggested that rogue killers might be behind the disappearance of journalist Jamal Khashoggi in Turkey. Trump said the king, in a 20-minute phone call, offered him a flat denial that the Saudi Arabia government was behind Khashoggi's disappearance and possible murder. A Saudi official, meanwhile, said that the kingdom has begun an investigation ordered by the king, which is separate from a joint probe with Turkish officials. That's all you need to know going into trade today. Up next, though, is Indian Open, so do stay tuned. This is Bloomberg Quint.